Hello students, myself Mansi Bhavna, Assistant Professor in Lakshmi Chand Golwala College of Commerce and Economics. Today we are going to be learning about inventory valuation, that is Accounting Standard 2. This is a topic in the syllabus of Fybaf. Let me just share the screen with you all. Okay. As we can see over here, the question talks about preparation of stock ledger. So here we have been given the details of the purchase and sale of the raw materials during the month of January 2014, and we are expected to calculate the value of the closing stock at the end of the month, that is on 31st of January 2014. In addition to that, we've been told that the stock in hand on 1st January 2014 was 50 units at the rate rupees 25 each. So this is the opening stock. That is on 1st January, we are beginning our month with 50 units at the rate rupees 25 each in our hand. And further transactions are given to us. That is on 4th of January, we have purchased 40 units at the rate rupees 30 each. Again, on 17th of January, we have purchased 60 units at the rate rupees 28 each. Then on 20th of January, we have a sale transaction of 50 units for rupees 35 each. Then on 22nd, again we are purchasing 80 units. 25th and 28th, we are selling 80 and 20 units respectively. And on 30th, we are again purchasing 100 units, and 31st, we are selling 90 units. So all of these transactions we have to prepare in a stock ledger using two methods. The first method talks about first in and first out. So first in, first out basically talks about that the stock which is there, which we have purchased earlier, will be utilized first, and the stock which is purchased at a later date will be used later. So जो stock हमारे पास पहले आया है उसको हम पहले use कर लेंगे, और जो stock बाद में आया है उसको हम बाद में use करेंगे. That is what is talking about the FIFO method. After that, we have another method which is weighted average method. Here we are not going to look at when the stock is come, but we are going to be assigning weights to the stock units that we have, and we are going to be calculating the rate accordingly. We are going to be utilizing or we are going to be selling the stock one after the other. Let's just first start with this FIFO method. Under FIFO method, the format of the stock ledger will look like something like this. Stock ledger for the month of January 2014. Here we have FIFO method. The first column will talk about the date. The second column will talk about the receipts, that means the purchases that you have done. The receipts and purchases are one and the same. Here we have again three columns. Units, kitne units हमने purchase किए, what rate at which we have purchased the units, and the total value of the transaction. Again, in the issue, that means the sale transactions, here also we will have the bifurcation of units, the rate, and the total value, and the balance. That will be that will give us the balance after each transaction. So now let us go to the question and see what is the first transaction. The first transaction will be the stock in hand. So we are going to be recording the stock in hand on 1st January 2014. So our opening stock will be recorded directly in the balance column. So here we will write down how many units of stock we have over here. We have 50 units at the rate rupees 25 each. So here we will write down 50 units at the rate rupees 25 each. That will give us a total amount of 1250. So we have stock worth rupees 1250 at the start of the month. After that, on 4th of January, if you see over here, on 4th of January, we have purchased 40 units at the rate rupees 30 each. So we will be recording this in the purchase column, that is the receipts column. So in the receipts column on 4th of January, we will be recording 40 units at the rate rupees 30 each. So 40 units, the rate will be 30, and the value of the transaction is going to be 1200. Now we need to understand how will we be recording the balance over here. On 1st of January, we already had 50 units. After that, in addition to that, on 4th of January, we have purchased another 40 units. When the method is talking about FIFO method, that means जो stock पहले आया है, that is the stock that we are going to be utilizing earlier. So we have to record separate balances. We cannot combine the balances in the FIFO method. So while recording the balance, you will first write down 50 units at the rate rupees 25 each. So you have 1250. After that, you will be recording another purchases, additional purchases that you've done. That means 40 units at the rate rupees 30 each. So that will give you a total value of 1200. Now I'll just highlight give different colors to it so that it becomes easier for you all to understand. So the first transaction talks about the opening balance where you have 50 units at the rate rupees 25 each. On 4th of January, you have a balance of 50 units and 40 units at the rate rupees 25 and rupees 30 each respectively. So this is the balance units that you have. Total balance kitna hai? You have total 90 units and the total value of the stock that you have is 2,450 rupees. But the rates are different and hence we will be recording it separately. If you all have any questions, you can just put it in the chat box. After that, on 17th of January, you have another purchase transaction of 60 units at the rate rupees 28 each. So we will write down the date 17th of January. Again, purchase ही है. So we will be recording it in the purchase column. How many units? 60 units and the rate is 28. So 60 units, rate is 28 each, which will give you a total value as 1680. So you will have 1680 as your total value of the transaction. Now when we are recording the balance, at that time, we will have three different balances. We will take down this as it is, 50 units at the rate rupees 25, 40 units at the rate rupees 30, and in addition to this, you will record 60 units at the rate rupees 28. So your transaction on 17th of January will look something like this, where you have 50 units at the rate rupees 25, you have 40 units at the rate rupees 30, and you have 60 units at the rate rupees 28 each. So this is your total balance as on 17th of January 2014. Moving further, after 17th of January, on 20th of January, you have a sale transaction. On 20th January, you are selling 50 units. Now, we have to keep in mind that whenever in the sale transaction you have been given the rate, you are not supposed to take that rate. You are supposed to ignore the rate of the sale transaction. I'll write it down over here for you all. Ignore the rate of the sale transaction. Do not take the rate. So this 35 rupees which is there is to be ignored. You are not supposed to take this. So this is to be ignored. Okay. So we are selling 50 units. That is what we have to look at it. Now, we are selling the units. So on 20th of January, you have to sell 50 units. So in the units column, you are supposed to write 50. Now, if you see over here, in the balance, you have 50 units जिसका rate था 25 each, then you have 40 units जिसका rate था 30 rupees each, and 60 units, the rate of which was rupees 28 each. So now if you see, you are going to be selling off these units. 50 units at the rate rupees 25 each. So this will go away. Entire thing will simply go away. This stock will be sold. And after that, you will be left with balance of 40 units and 60 units. So your transaction on 20th of January will be something like this. Your complete transaction will look like this, where you have sold 50 units at the rate rupees 25 each, and the total value of the transaction is 1250. After that, you have a balance of 40 units at the rate rupees 30 and 60 units at the rate rupees 28 each. So this is your balance transaction. I hope this is clear to you all. Moving further, on 22nd of January, you are purchasing 80 units at the rate rupees 29 each. So on 22nd of January, you are purchasing 80 units at the rate rupees 29 each. So that will give you the value of the transaction as 2320. So the value of the transaction is 2320. I'll just delete all of this to avoid the confusion. So 80 units at the rate rupees 29 each. So that your value of the transaction is 2320. Now looking at the balance, You have a balance of 40 units and 60 units, so that will come down as it is. There will be no changes in that. In addition to this, because you have purchased 80 units at the rate rupees 29, that will be recorded over here. So your total transaction on 22nd January is going to look something like this. Okay, so the balance on 22nd of January talks about 40 units at the rate 30, 60 units at the rate rupees 28 each, and 80 units at the rate rupees 29 each. So these are the different quality of the stock that we have as on 22nd of January 2014. Moving further, after 22nd of January, we have been given a transaction on 25th of January, which is talking about sale of 80 units. Again, as we discussed previously, this rate is to be ignored, so we will ignore the rate of the sale transaction once again. We are not going to take that rate. We are going to simply look at selling 80 units. So now on 25th of January, you have to sell a total of 80 units. Now we have to listen carefully. On 22nd of January, we have stock of 40 units, which is costing rupees 30 each. So first we will utilize this stock. So here I will get 40 units at the rate rupees 30. Now we have to sell total of 80 units. So out of this 60 also, out of this 60 which is there, we are going to be using, only 20 units. Sorry, only 40 units we are going to be using at the rate rupees 28 each. I repeat, this 40 will be completely gone. And once this 40 is completely gone, after that, out of this 60, we are going to be using only 40. So out of this 60, you will have a balance of 20 units at the rate rupees 28 each. And this 80 units balance will be carried down as it is. We have not touched these units at all. We have not touched the stock at all. So if you observe, 40 units are completely gone. This is sold. And out of the 60 also, you have sold only 40 units. So you have sold total of 80 units and the value of the transaction is 1200 plus 1120. So that is how the value of the transaction is. And the balance on 25th of January is 20 units and 80 units at the rate rupees 28 and 29 each. So we have a total of 100 units balance on 29th of or 25th of January. So this is the transaction for 25th of January. Further, on 28th of January, you are again selling 20 units. Again, the rate is given, which is to be ignored. You are not going to take this rate. You will be ignoring this rate. Hence, I marked it in red color. And you are selling 20 units. So these 20 units which you have can be sold off directly. All of this 20 can be sold at the rate rupees 28. So now you will have a balance of only 80 units at the rate rupees 29 each. So your 28 transaction is also completed. You have 20 units which you have sold at 28 rupees each, and then you have 80 units of balance of 29 rupees each. Moving further, on 30th of January, again you have a purchase of 100 units at the rate rupees 26. So you will be recording it in the purchase. And just delete these zeros so you have no confusion. Purchase of 100 units at the rate rupees 26. So I will write 100 over here at the rate rupees 26. So that will give me 2600. Now my stock will be these 80 units will come down as it is. This is not touched. In addition to that, we have these 100 units which will come down as it is. So the transaction of 30th of January will be completed in this manner. And the last transaction which is there on 31st of January. On 31st of January, you have a sale of 90 units. So you are going to be selling 90 units Now we have to sell a total of 90 units, out of which this 80 can be utilized directly, and out of this 100 you will use only 10 units because you have to sell total 90 units. So you will use these 80 units, 80 at the rate rupees 29. This will be sold, and out of this 100 you will sell only 10 units. So here you will have 10 at the rate rupees 26, which will give you 2260, and your balance will be these 100 units may say you have sold only 10 units. So you have a balance of 90 units at the rate rupees 26. So this will be your last transaction, and that will give you your closing stock at the end of the month. That is on 31st of January, you have a stock of 90 units costing rupees 26 each. So you will be writing below the stock ledger the value of closing stock on 31st January is 90 units at the rate rupees 26 each. I'll just show you the entire stock ledger so that you can have a glance at the entire stock ledger once. You have to keep in mind that during the sale transaction, the rate is to be ignored, and whenever you are purchasing it, the previous transactions will be brought down, the previous units will be brought down as they are in the balance column. You're not going to touch those previous units at all. You're going to bring them down as they are. So this was about the FIFO method, that is the first in, first out method. The same sum we will be solving using weighted average method. We will be assigning weights to the units that you have, and you will be solving it using the weighted average method. Okay, I hope this is clear to you all. Let us go further and look at the format of the weighted average method. The format of the weighted average method, the stock register as per the weighted average method will also be the same, where you will have receipts column which will talk about your purchases. You will have issue column which will talk about your sales, and you will have one balance column. The first transaction will remain the same because it is beginning with your opening stock. So whenever it is beginning with your opening stock, you will start as normally only. That is on 1st January 2014, you had 50 units at the rate rupees 25 each. It will directly come in your balance column, 50 units at the rate rupees 25 each. So the total amount will be 1250. 50 units at the rate rupees 25 each. So the total column amount will be 1250. This will be your balance for the opening stock. After that, moving further, on 4th January, you are purchasing another 40 units at the rate rupees 30 each. So in the purchase column, you will write down 40 units at the rate rupees 30 each, which will give you amount of 1200. Now we have to understand that instead of recording the stock separately, we are going to be adding everything together and we will be calculating the total. So you have 50 units over here and you have 40 units which you have additionally purchased. So the total number of units is 90 and the total amount will be added. Again, you will add 1250 plus, so you will do 1250 plus you will do 1200, which will give you 2450. So this will be your total balance. So as on 4th of January, you have a balance of 90 units for rupees 2450. This is your transaction for 4th of January where you have purchased. Now if you see the difference between the FIFO method and the weighted average method, under FIFO method on 4th January, we have recorded the balances separately. Whereas under weighted average method, we will add it and we will record it together. Moving further, on 17 January, you are purchasing another 60 units at the rate rupees 28 each. So on 17 January, you will record 60 units at the rate rupees 28 each, which will give you 1680. Now for the balance, you will be adding 90 plus 60. So you will get a total of 150 units, and the amount also will be added. So you have 2450, your previous balance, plus 1680, your additional purchase. So you will get 4130 rupees as your total balance. So you have a stock of 150 units costing rupees 4130 on 17th of January 2014. So this is your transaction for 17th of January. Moving further, on 20th of January, you have sold 50 units. Again, the rate for the sale transaction has to be ignored. That is going to remain the same. You are not going to take the rate of the sale transaction. You are just going to sell these 50 units. So now we will not record it in the purchase, but we will record it in the sale. Here we need to know if we are ignoring this rate, if we are not taking this rate, at what rate are you going to sell the units that you already have? So to calculate the rate, what are we going to do is the total balance divided by the number of units. So here to get the rate, you will do 4130 divided by 150. So this is how you're going to be calculating the rate for the sale transaction. So that will be giving you as 27.53, which you will round it off and you will get as 27.5. So you can take the rate up to 2 decimals. So you will get 27.5 over here and your total value will be 1375. So this 27.5 which is there over here, I'll just mark it for you. This 27.5 is taken from here. Just 1 second, let me take a different color over here. Yeah. This 27.5 is taken from this calculation, that is 4130 divided by 150. This 4130 divided by 150 will give you 27.5, which will be recorded over here. Now, out of this 150 units, you have sold 50 units, so you have a balance of 100 units. And here to get the balance, what will you do is subtract 4130 minus 1375. That will give you 2755. So that will be your balance. Now, if you want to check the number of units which are there, you can check it on 20th of January under the FIFO method. Your balance was 60 units and 40 units, that is 100 units. The same number of units balance you are getting over here also. Moving further, on 22nd of January, you have purchased 80 units at the rate rupees 29 each. So on 22nd of January, you have purchased 80 units at the rate rupees 29 each. So that will give you 23 to 20 rupees. And in the issue column, there will be nothing. In the balance column, you will simply add. So here you will get 180 and here you are going to get 2755 plus. So you will get 5075 over here. The value of the units is 5075 and the number of units is 180 on 22nd of January. Moving further, on 25th of January, you have a sale transaction of 80 units. Again, you're going to ignore the rate. So sale transaction hai of 80 units. For the rate calculation, what are you going to do? You are simply going to divide the previous balance by the number of units. So 5075 divided by 180. So when you do this, the rate that you're going to be getting is 28.2. So here you will take 28.2 and you will get 2256 as your total amount over here. Out of the 180 units, you have sold 80 units. So you are left with 100 units and the balance will be calculated as this amount minus this amount. you will get 2,819 rupees as your balance. After that, the next transaction is on 28th of January, where you have sold another 20 units. So again, you have a sale transaction where you're going to sell 20 units. The rate will remain the same because you have not purchased anything, so the rate will not change. It will remain the same only. You can use the same rate. And if you want to see the previous balance rate, then what you can do is 2819 divided by 100. So you will get it as the same rate only, 28.2. Out of these 100 units, 20 units are gone, so you're left with 80 units, and the amount left is 2255, which is 2255. The next transaction, you have purchased another 100 units. So over here, you will be recording in the purchase column 100 units, and the rate of purchase is 26 rupees. So here you will be recording 26 rupees, you will get 2,600. Then in the balance, you will again get 180, and you will add both of these values, 2,255 the previous balance plus 2,600 the additional purchase. So you will get 4,855 rupees. After that, the last transaction talks about 31st of January, where you are selling 90 units. Again, the rate of the sale will be ignored. You are not going to take that rate. You are selling 90 units, so purchase will not be recorded. In the sale transaction, you will record 90 units. To get the rate, what will you do? 4855 divided by 180. And you will get the sale rate as 27 rupees. So when you're getting the sale rate as 27 rupees, here you will be left out of the 180 units, you have sold 90 units, so you're left with a stock of 90 units, and the value will be minus 2430, that is 2425. So you will get a balance of 90 units. Now, if you check under the FIFO method also, at the end of the month, you had a balance of 90 units, and under weighted average method also, you have a balance of 90 units. Only the rate is different. Here also, you will write down the value of closing stock on 31st January is 90 units costing rupees 2425. So that is your value of the closing stock. These are the calculation of the rates which are written for the sale transaction. So with this, students, we've completed preparing the stock ledger under the FIFO method as well as under the weighted average method. Thank you so much for listening patiently to the lecture. All of you have a good day. Take care.